Let's start over. We're going to be discussing the 50-50 strategy for positioning ourselves in the market to take advantage of any market motion. Let's say that let's pretend for 1 minute that we're here. The green lines represent our support and resistance line from historical places within the market. And what we're going to do is we're going to take the one position double up strategy and we're going to execute it on what we think is going to be a bear market. We think the market is going to come down. So if we buy here, and then this is our next support line, we would double up here. Okay? So this blue line becomes our profitability line. Is we bought down here, and so it has to come up to here for our position to become profitable. Everything above this line is profit. Everything below this line is not profitable, right? Because this is where our position sits when we double up. When we average this price and this price, we end up with this price. This is our new price. If we profitable, not profitable, okay? So now we're here. We're at two positions in the market, and we come back down to the next line right here, and we double up, and we reach this point right here, and this is our new profit line, okay? So we can be profitable at everything above this, and everything below this is not profitable. If we come down here, we now need to buy 4 more positions. We're now at a total of 8 positions. Our position line sits here. Everything above this line is profitable, everything below is not profitable. So, can we plan to trade a bear market using this strategy? Absolutely. What I just did. Can we plan to trade a bull strategy using this market? Well, only if we're still holding Ether at the time, okay? It only works when we're going up if we're holding Ether, and it only works in reverse when we're holding dollars to buy Ether with, or holding Bitcoins to buy Ether with. So, let's assume that we go 50% Ether, 50% Bitcoin in our portfolio. All right, this is the Bitcoin Ether chart, okay? If we were to buy Ether here, and then we were to double up on our Ether here, we would be profitable here. If we were to buy Ether here, and then we were to triple up on our position here, we would be profitable here, okay? And again, if we were here, and we were to come here, and we were to triple up on our position here, we would be profitable here. So all we have to do is make a motion above this line, right? Using the triple up strategy, we can have our profit line, bring it down by half, right? So, can this work in this market? If I had made this plan, and I decided I was going to trade this plan, and then the plan worked out exactly, how I thought it was going to, would I have been profitable? See, I'm not looking forward in the market. I'm looking back in the market, and I'm projecting forward. Would I be profitable? Well, let's see. Okay. First of all, I'd come down to here, and I'd triple up. I'd now have 3 positions, and I would not be profitable. Okay. I'd come down to here, I'd triple up again, and I would still not be profitable. I'd come down to here, maybe I didn't get this order in, but it shoots back up to here, and now I'm profitable. Here's my profit zone right here. Where do I sell everything? Right here. Okay. At this point, everything that I have bought, I'm now selling. I'm back to 0 in the market. Okay. So I'm free to buy 1 position. Free to buy 1 position, don't triple up on it. Look at where I'm profitable on that almost immediately. But say I want to take more profit on that and I don't take it. Okay, I'm here in the market. I need to triple up here. No good. Don't get the profit I want. Triple up here. Maybe I missed this, right? Come down here. Finally, I triple up here. Now I get the profit I'm looking for. Okay? Well, I just traded the hell out of this bear market, and I made a ton of money doing so. Okay? Let's do it again. I'm now here. Can I buy one here and in the expectation that it's going to go up? Yeah, absolutely. What happens when it goes down? Well, I triple up. Okay? What happens when it goes down again? Well, I triple up again. Oh, look at me. I'm profitable. I'm profitable in a bear market. Okay? But this only works if you're using position sizing of 0.001. And what's more is you want to be able to take advantage of when this does exactly the opposite, okay? So let's do it in the reverse. Is here it goes up and I sell one position. Well, here it goes up and I sell two positions. Here it goes up and I sell four positions. Look at, I'm profitable right here. I buy them all back. I buy all the positions back at a cheaper rate. How? Well, just selling out well, I'm sorry, can you guys repeat the question? I'm having a lot of questions thrown at me here. Does this fail? Not if you don't plan for it to fail, right? The reason that it fails is you're trading a market which does not have volume to support it bouncing back up like this. So depending upon just how bare your market is, doubling up might do you just fine because it's doing one of these all day long. But if it's going down faster, you might need to triple up in order to catch this rise. Okay? If it's going down even harder, you might need to quadruple up in order to catch that rise. Okay? When does this strategy fail? When you fail up here, when you start up here with way too big of a position. Because if you plan that your portfolio will only allow you to triple up not here, but here, then you don't triple up here. That's when the plan fails, is when you don't plan ahead. If you know that your portfolio size is such that you have to skip every other opportunities, then you're going to trade your plan out, guys. You can, Thrasher, are you not in there? There should be buttons under the presentation. Somebody help Thrasher out there. Sorry, if I didn't answer your question, can you please ask it again? The point I'm trying to make here, though, is that depending upon how you test your market, in this market we can see tripling up would have been brilliant for us. Okay, in other markets we might need to quadruple up. You got the cojones to trade that market, son? You got the portfolio to trade that market, son? You better start with real small positioning if that's a market that's going down. There should be, yeah, somebody help Thrasher out in the room, please. He's still not able to get it. I'm going to move on here. In a bull market, this is obvious, okay? So let's do this in a bull market, though. Okay? Here, we're going to, here we see this. We're going to buy a shit ton of Ether. We're going to go 50-50 on Ether, right? We're going to say we have 50% Bitcoin, 50% Ether at this point, right? Well, it comes up to here. Can we sell one? Absolutely. Can we buy it back here? Yeah, totally. Profitable right here, okay? Can we sell one here? Yeah. Can we buy it back here? Absolutely. But even if we don't, what if we need to double up here? Well, then we're profitable. Just figure out where your halving is, where your triple is, where your quadruple is, where your 5x is, where your 10x is, where your 100x is, and plan accordingly, according to your portfolio, according to how you test this market to be working, according to volume coming in, according to indicators telling you that we can get a bounce right here. Right? Indicators telling you that we can see a bounce, and this will tell us that it's okay to triple up right here or quadruple up right here. But if we don't see a bounce, let it fall through. Triple up, quadruple up down here. Okay? The point about the tripling up and the quadrupling up and the doubling up, the one position, I had to teach you that. I had to make sure that you knew the answer to the question was one position size. If you don't know that the answer to the question is one position size, I can't tell you where to double up and triple up and quadruple, if you should quadruple up on this market, because we have to look at and see if it gives us the ability to profit on a double up, or if we need to triple up to profit, or if we need to quadruple up to profit, because it's just not moving up fast enough. Right? So the average of each move is the average of the real position of the new support. That's correct. It's the average of, if this is $20 and this is $10 and you buy here and you buy here, then your average position is $15, right? If you buy here for $20 and you buy here $10, but you buy two positions, your average position is $12.50, and you're profitable above $12.50 instead of 15. If you buy here and you quadruple up here, your average position is $11.33, right? So now you're profitable above $11. If you buy here and you 10x up here, you're basically profitable anywhere above 50 cents or a dollar, right? So you can 10x, you can 10x, you can 10x if your portfolio will allow it, and goddamn, you better plan that trade. You better plan that trade real well. You got the cojones to do 10x in a downturned market? You better know what your portfolio sizing is. You better know how far you might need to run on that before you ever enter that first position up here. The time to know that is before you make the first buy right here. The time to know that is to make the plan now. Here's the plan. Here's the opportunity. Here is the point that we can say exactly what we can do no matter what. Doesn't matter what the market is going to do. We're going to do something, and we're going to be profitable doing it. Why? Because we know our position size. We know our portfolio size. I'm sorry, Thrasher, I can't go back. You're just going to have to watch this after the fact. This works only if you are 50-50 in the market. Okay? So, now, let's extend this strategy out. Let's, instead of doing ETH BTC, let's do ETH BTC USD. Okay? What we're doing is instead of doing a 50-50 split, we're doing a 33-33-33 split. Okay? 33% of our portfolio is in Bitcoin. 33% of our portfolio is in Ether, and 33% of it is in US dollar Tether. Okay? Does that mean that in any one of those markets, BTC ETH, BTC USD, BTC or ETH USD, that we are ready for a motion in any direction? Yeah, it does. We can take advantage of anything. Yeah, that's exactly right. You would buy 7 if you got the cojones, if that's the plan, if you have figured out that your portfolio will allow that all the way to the bottom, right? And that's the thing. You got to plan for that. You got to plan for the fact that you might have to double, triple, quadruple up all the way to the bottom. And if you don't have the portfolio for that, skip one. Right? Skip a resistance line and double up on the next resistance line. Skip a resistance line and double up on the next resistance line. Well, now you're only doubling and tripling and quadrupling up half as often, but you can still take advantage of the motions. Right? This is all about position sizing. And then when we do the 50-50, we're positioning. We're positioning ourselves in the market for any motion. Okay? So, now, extend this out. Take this to the three-way menage a trois, right? We've got 33% Bitcoin, 33% Ether, 33% dollars. In any one of these markets, BTC USD, BTC Ethereum, BTC or ETH Ethereum, or ETH USD, ETH, any one of those, any motion, we're ready to go. We can go up, we can go down, anything we want to do, we can do, okay? Then, what happens is, focus back on the BTC USD for just 1 second. What happened is we sold Bitcoins, we sold Bitcoins, we sold Bitcoins, we sold Bitcoins. The market was running up on us. It finally came back down enough to give us profit on buying them all back in. Okay? Now we've got the same amount of Bitcoins that we started with, but we've got a whole lot more dollars. Okay? Well, what do we do with those dollars? We want to rebalance our portfolio. Well, we don't buy more Bitcoins. No, we take those dollars and we go look for Ether to buy. We go look for Dash to buy with those dollars. We go look for Ripple to buy with those dollars. Anything to buy down those dollars to bring them back in line with the amount of BTC we have, to bring us back to 50-50 in the market. Okay? This is the bigger strategy. I had to teach you that the position size is 1. Always. I had to drill that into your head so that you knew when you asked the question what the position size on the opening trade was. I had to drill into your head that if it comes down, you can double up, you can triple up, you can quadruple up, in order for you to know that this will make you profitable. Now I can tell you about positioning 50-50, because what we're really doing is we're just constantly shifting the funds around within the portfolio and taking advantage of every market motion. No matter what the market does, we're profitable. No matter what, if it goes up, we're profitable. If it goes down, we're profitable. And every motion up is an opportunity to recognize more profits, and every motion down is an opportunity to buy them back cheaper than we sold them for. Every single time. So when you're first starting out, it doesn't make sense because you haven't sold anything at a profit or you haven't bought anything at a lower price yet. But over time, as your portfolio builds, as you keep rolling the next trade into the next trade into the next trade, what you're doing is you're not even worrying about, what opportunities you're making. You're more worried about balancing your portfolio to take advantage of the next opportunity. You're no longer focusing on your individual profits. You're now focusing on your profit strategy and positioning to take advantage of all the profits. And as you do this more and more and more, you might start to get into other markets. Now we're doing a four-way split between Ether, Dollar, Bitcoin, and Dash. Now we're doing a five-way split between Ether, Dollar, Bitcoin, Dash, and Ripple. Okay? I have my portfolio diversified across the top 10 market cap coins. My whole job is in rearranging those balances. So whenever anything moves in one direction, I'm just selling it out. Whenever anything moves in the other direction, I'm just buying more of it. But it starts with one market. It starts with one position. It starts with recognizing that if you buy the position low, you can sell it back high. And if you buy it and then it goes down, you can buy more in order to become profitable. Once you realize that, then you layer in the 50-50. Once you master the 50-50, you move to the 33 split. Once you master the 33 split, you move to the N split. N, as many coins as you want to be in, as many markets as you want to be diversifying across. And that's the key, is we're diversifying our portfolio across all of these opportunities. And all of these opportunities are paying out constantly. And they're constantly setting us up for profit no matter which direction the market is headed in. You really can be profitable long term. You really can sit here and just turn money into more money, stack assets, more and more assets every single day. I want you to think more about this. Start by realizing that the position size is 1. Then figure out how to plan for a bear market. Figure out what your portfolio will allow you to do. Will it allow you to triple up? Will that work in this market? Will that have been profitable in the past? Can you be profitable that way? Plan the trade the plan. Do it in the past. Do it against the old charts, right? Here we've got tons and tons of data to work against. There's no reason for us to limit ourselves. We've got tons and tons and tons of data that we can sit here and say, okay, if I sold here, could I have bought back here? Yeah. Or here? Yes, right? And then sold here again, and then bought here again, and then sold here again, and then bought here again? Yeah, absolutely. Plan the trade. Figure out what your portfolio will allow you to do. But do it using the smallest of position sizes, and do it knowing that this is a reality. This right here is you are here in the market, and you wake up the next day, and you are here in the market. We just went from 3,000 to 2,000 in a matter of days. Be prepared for that. The only way to prepare for that is small position sizing to start. Then, once you understand that the answer to the question is one position size, then I can tell you that the next part of it is 50-50. The next part of it is now we can sell when we're going up and buy when we're coming down. Once you understand 50-50, make it 33. Once you understand 33, make it an n-way split. This is how pro traders take advantage of every single opportunity in the market. This is how pro traders make sure that they are always profitable. And this is how this is the mindset of a pro trader. This is the way of the trader. Thank you for your time.